How can you identify stock market correction? Is it possible? This is what I'm going to share in this today's video. Hi, hello, this is Ganesh Santuri, your stock market profit coach, author of the book One Page Stock Market Plan. I help you in multiplying your money by investing in stock market. And today's video is all about how to identify stock market correction, and is it possible to predict, and is it possible to make more money in stock market if you know those kind of corrections. Okay, so stock market correction can happen in two situations, right? Two, not one, two situations. The first situation is when the valuation is very high, and it can go high and high, but there is a general perception how far the value in general how far the stock market valuation will be. For example, in the case of Sensex, with which we know whether market is very high or low, there are two exchanges: National Stock Exchange and Bombay Stock Exchange. And Bombay Stock Exchange is the oldest exchange, and it is in India from 1875. Right now, the market value is around 49,000 to 50,000 points. Let's take a range in that. Okay, according to in this range, the price earning ratio that says whether the market is very high or moderate or very low. Is it in a buying zone? Okay, so Sensex price earning ratio, if it is between 16 to 20, which says that it is in a buying zone, and if it is less than 16, it means strong buying zone. And rarely the stock market comes to down to that range, which means the from 50,000 points it declines to that level. Right now the price earning ratio is around touching 40, and just remember, if it needs to less than 20, just remember how far the market needs to decline. And if it is more than 21 to 24, it means stock market is very high. Broadly, the market is very high, and right now the market is around 40. I leave the question to you whether the valuation is very high or very low. Just post it in the comment section. Okay, this is what will happen. And the other situation is when the broad economic changes are happening in the economy. And for example, Indian government expected a market range to be around GDP to contract around 7.7%. Contracting meaning minus 7.7 this financial year. Now today, the yesterday, the third quarter result came in, and it was around plus 0.4 percentage, which means just to pass. We crossed the zero. And what is expected is that in the last quarter, and it will compensate, and for the entire financial year we are expected around minus 8%. What if it touches minus 10%? And what if the second COVID wave is very serious and people are so serious? I don't want that to happen, but that is a huge risk in India's economy. And what if the US treasury yields are keep on rising, which means the if till now for the last 10 13 years the US treasury yields, the interest rate in India, right, similarly interest rate in US has been less than 1 rupee or so, less than 1% or so, and it crossed 1% after a very long time, and people are feeling that that is very safest place to put our money, and they're going there. And what if it keeps continuing, and if it crosses 2 rupees, sorry, if it crosses 2 percentage, and what if the crude oil prices keep on increasing, and India is already the um, India's petrol price is almost touching 100 in most of the cities. And if it crosses 100, just think of what can government do, and what will happen to the inflation. All these are broader economic changes, and it will affect the growth GDP, and it will affect the inflation, the macroeconomic indicators, and that will cause a big correction in the Indian stock market as well. And there are weak global cues, and other reason is weak global cues, meaning there is no positive news, and already all the things are factored in. And right now, what are the weak global cues? Second COVID wave is spreading in, started in UK, and they have been fearing about how far it will go. And WHO, the World Health Organization, is fearing that second COVID wave may be much more severe than the first one. So all these are weak global cues, and that will affect not only Indian stock market, all across. If all the if US market is maybe tumbling or correcting, and if the Singapore market is tumbling or correcting, that will have a huge impact in Indian stock market as well. So all these are points which says that stock market correction, we can't say when it will happen, because when the market is going up and up and up and up, all the positive news will get added up like anything, one above the other, one above the other. And if there is one negative news coming up, then everybody will keep on saying that market is in high valuation zone, and US treasury yield is positive, India's inflation is going up, and petrol prices is increasing, government is not taking any measure, GDP growth is shrank in the last few years together. All these are there for the last few years. Whenever one negative news is coming up, all things will get piled up like one after the other, one after the other. So if these things are piling up, correction becomes huge, and we don't know when the correction will happen. And one thing to keep in mind is that whenever the valuation is very high, it will correct like anything, and we don't know how far it will go down and how far it will bounce back. It's impossible for anybody to say. And the best example is what happened in the March month is everybody feared the market will come down like anything still. But US stimulus, European market stimulus, and India's lockdown measures that stopped the stock market crashed by 25,000 points, and it bounced back because of liquidity from all the developed countries, and it started growing up like anything. It crossed 50,000 points. Nobody expected Sensex to cross 50,000 points. So market is free flow. It will keep growing, and whatever you saw, whatever you think, it may be opposite. And one thing which you can keep in mind to make a huge sum of money during this market correction is have a money, whatever it is, invest in a staggered manner, choose the stocks, bottom up we call it. Bottom up meanings you know the quality stock, stick to the quality stock, and keep adding only when you feel that the stock is good, right? What? Because market correction may be 3 months, 6 months, or 1 year, but after that, anywhere around the line, market needs to rebound, because the business needs to rebound. If business is rebounding, only the quality business will rebound faster and your stocks will grow up faster, right? So this is one strategy which you can follow: bottom up analysis, and just keep adding during the market is falling again over a period of time. Nobody knows how far it will grow, how far it will go down, and at one point somewhere resistance will come up, and people will feel that everybody needs to put in their money, and all the things will come up, right? So this is all about stock market correction. Hope you had lots of information. And if you feel that you need to ask something, please post your question. I'll be happy enough to answer my views on stock market correction and how far the next correction can go on. Let's see how far it can go. Thank you so much for watching. Please click the subscriber button and share this video with your friends as well. Thank you.